By the way, talk about a payday. Check this out. Charlie's on set now. He's going to love this. Rumors are swirling that Yahoo planning a sale, and if current CEO Marissa Mayer is ousted, she could be looking at a $37 million payday. Good for her. It's in the contract. April 11th is the deadline for preliminary bids for Yahoo, but if Mayer is fired before the sales go through, her golden parachute is going to lose a lot of air. Not sure exactly how much, but we'll see. Yahoo currently trading up 3% at 36.35. The election season also heating up. All eyes on the troubled pharmaceutical company Valeant as candidates continue to bash its business model and the activist investors who control them. Fox Business senior correspondent Charlie Gasparino has all the details.
Well,
now, Valeant was a darling at one point until someone said, your business model is a bit
It's
off.
a business model based largely on hiking up prices, not on research, development,
and the traditional.
The traditional. And Wall Street bought into this. Now, what's fascinating about Wall Street, Goldman Sachs, after 90%, most of last year, having a buy on the firm, pushing the stock out, drops coverage in December. Downgrades it to a neutral in November. Deutsche Bank drops coverage. And look at this. We have an interesting chart on how much fees these guys, before they started getting religion about the business model, which, as you know, was under tremendous pressure. Look at that.
Total suspense.
We're talking about five of the top 5 firms since 2000. They made about $500 million in fees. And look, now they've. By the way, those suspended are very recent suspensions.
Okay.
This is after they earned all the fees, after it came to light. The Valeant's business model, like I said, based much more on this sort of predatory pricing of products through these sort of ancillary pharmacies like Philidor and these other issues. I'm not saying that's illegal. It's just in a highly regulated business. Okay,
they're going to come under a lot of
scrutiny, and that's what happens. And as you know, the stock has been down from like 65 to where it is today, 20. And all these companies are all these big Wall Street firms. This is after the fact, dropping coverage, and it's one more reason. If you're the small investor out there, you're looking at Wall Street ratings. You know, it's a grain of salt. They're basing this stuff on essentially on investment banking fees, which you've seen it.
More to this story to come, I feel. Talking of another story, I wanted to mention Carl Icahn as we went to the break in the last segment. Look, he's on the campaign trail. Does he help Donald Trump? Does he, you know, Donald says, hey, my Treasury Secretary.
This, I think, is going to be a big story going forward. Not in the Republican primary, but I think if Donald gets the nomination, as he's coming close to getting, Carl Icahn, who's his stated or nominal, at least, economic advisor, listen, Donald said he wants him to be Treasury Secretary. Right now, there's a lot of criticism, particularly among Democrats. Elizabeth Warren, Bernie Sanders, and Hillary Clinton have attacked activist investors for being involved just in short-term gains, and that's essentially what Carl Icahn does every day of the week. And I'm telling you,
legally.
I'm not saying it's illegal, but they think it's immoral and bad for the company. I can give you both sides of the argument, but I will say this: I think Carl Icahn, if Hillary becomes, because she's not going to go after the big Wall Street firms.
She's been taking money from the big Wall Street firms.
She's been taking money, so it's an easy target for her.
This is her live, by the way, in Waukesha, Wisconsin, as she hits the ground 1 week to go before the primary, and she's smiling away.
And she's not taking on the big Wall Street firms like Goldman Sachs, would have paid her all those speaking fees right there. But what she will take on, I believe, and a lot of Republicans believe that I talk to, they will go after activist investors. And if she goes against Donald, Carl makes a very big, juicy target. You know, he's had an
easy target, let's be honest.
Interesting, somewhat controversial career over the years, getting in and out of stocks for quick gain. I'm not saying there's anything wrong with it, but that's what they're going to hit him on.
So is this a smart move by Donald Trump or not, to get him involved?
Listen, I like Carl a lot. I know him. He's a smart man. He's a very good investor. He's done some good work for his clients. But if you really want to make hay out of people that are into it for the short term.
He's the poster child for that.
He's a good poster child for that, and it's an easy hit for Hillary because she's already laid the groundwork. She won't go after the big Wall Street firms, but she will go after the activist investors who she thinks are in and out. By the way, they used to call activist investors green mailers.
Green mailers.
Remember that whole remember from Wall Street, you go in real quick, buy a small chunk of a company. You don't get out until, you know, until they buy out, right? It's called green mail. And they buy out because they don't want you harassing them anymore. And so that's the old thing. You know, it's not called green mail, and now it's called activist investing. But that's where I think Donald is very vulnerable with his Wall Street ties. And Carl, I know Carl, the last thing he wants is to be associated with any of this, because he's the guy that wants to keep under the radar.
We'll see. We shall see. It's been a crazy political season. Charlie, thank you.